We are willing to resolve international concerns through dialogue and consultation with the U.S. on the basis of mutual respect, equality, and reciprocity. However, we will never accept pressure or threats and will firmly safeguard our national sovereignty, security, and development interests. We hope the U.S. will work together with China to implement the important consensus reached by the two heads of state and return to the path of resolving issues through dialogue and consultation.
From the U.S. tariffs expected to come into effect to the ECB's rate decision, these are the stories to watch in business and finance in the coming week. U.S. President Donald Trump's 25% tariff on Mexico and Canada is set to go ahead on Tuesday. China will get an extra 10% on top of the 10% tariff that came into effect on February 4th. Trump has also said he'll slap 25% tariffs on European imports, which has knocked the euro off one-month highs and dented regional stocks. But uncertainty is rising, and the Trump bump to growth investors had banked on does not appear to be happening. U.S. jobs data comes out on Friday, as worrisome indicators about business activity and consumer confidence raise yellow flags. The February payrolls report is expected to show an increase of 133,000 jobs, according to a Reuters poll. Payroll growth in January slowed to 143,000 jobs, below estimates. China's highly anticipated National People's Congress meeting kicks off on Wednesday. Despite uncertainty over Trump's tariffs and mounting tensions with the U.S., Beijing is expected to stick to its 2025 growth target at around 5%, though a Reuters poll showed economists expect 4.5% this year. A show of greater fiscal support is expected, as authorities seek to boost consumption and growth. The European Central Bank is expected to cut rates again on Thursday. Investors predict 85 basis points to be shaved off by year-end. 3 cuts and a chance of a fourth to put the benchmark rate near 2%. But in a sign of uncertainty, traders expect less than a 70% chance of an April cut. U.S. tariffs, a new German government, a potential Ukraine ceasefire, and a surge in expected defense spending could all shape the pace of cuts in the months ahead.
Stocks and bond yields slid on Tuesday as investors globally ducked for cover. That's as the US hit Canada, Mexico and China with steep tariffs and launched new trade conflicts with the top 3 US trading partners. Cameron Johnson is a supply chain expert and senior partner at Tidal Wave Solutions.
So the world order of yesterday is not the world order of today. With US actions, particularly with tariffs against China and the challenges with Ukraine, what we're seeing is actually a fundamental shift into a new order. We don't really understand what that is at the moment. For example, Europe is going to try to get closer to China and other U.S. allies such as Japan and Australia. China is also going to try to get closer to those allies by offering its markets, but also products. And so we don't know how exactly the strategy is moving forward.
China swiftly retaliated against the tariffs, announcing on Tuesday 10 to 15% hikes to import levies, covering a range of American agricultural and food products. European stocks slid 1%, falling back from record highs, with shares of automakers losing 3%. Other riskier assets lost ground too, with Bitcoin slipping under $84,000, erasing a surge at the start of the week. The risk-sensitive Australian dollar fell too. MSCI World Equity Index, which tracks shares in 47 countries, fell 0.2%. In Asia, Japan's Nikkei fell 1.6%, and Taiwan's benchmark lost 0.5%. Hong Kong's Hang Seng fell 0.4%. Some market players are also concerned about the fallout for the US economy, especially given a run of soft data in recent weeks.